Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analyst and expert from fx.su portal. Here we go. Today is September 7 and we're starting from euro-dollar pair with Jakub Novak. Weak retail sales data in the Eurozone limited the pair's growth, while the strong data on the US services sector led to a collapse in the afternoon. Even so, buyers managed to protect monthly lows. Today, the report on Germany's industrial production volume will come out, followed by the data on Eurozone GDP and employment levels. Revised indicators for the second quarter, likely to be worse, will further strengthening the ECB's confidence that continuing an aggressive policy will threaten the economy, further weakening the pair. For long positions, buy euro when the quote hits 1.0735 and take profit at the price of 1.0768. Growth will only be possible after good Q2 figures in the Eurozone. However, when buying, ensure that the MACD line is above zero, or it's starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0715, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0735 and 1.0768. For short positions, sell euro when the quote reaches 1.0715 and take profit at the price of 1.0685. Pressure will persist in the event of poor Eurozone data indicating growing economic problems. However, when selling, traders must ensure that the MACD line is below zero, or it's just starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0735. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.0715 and 1.0685. The next stage of our review is the next major, GBP USD, Petr Akimovich describes. GBP USD has been trading downside this morning, and we found breakout of the three-angle pattern, which is good sign for further drop. Due to the short-term downside trend and the breakout of the consolidation this morning, Petr sees potential for the further drop towards the lower reference. Downside objective is set at the price of 1.2400. MACD oscillator is showing fresh downside momentum, which is another good sign for further drop. Key resistance is set at the price of 1.2510. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1918, below the 200 EMA and the 21 SMA, following a downtrend formed since August 30, when the price reached 1953. Gold is currently trading near yesterday's low at 1915, which bottomed out after an upbeat US PMI, which unexpectedly rose to 54.5 in August, above analysts' expectations. The daily pivot point is located around 1920, and a 3-8 mirror level is above it, around 1921, which could put downward pressure on gold, and it could fall towards the 2-8 mirror level at 1906 in the next few hours. In case gold breaks below 1915, we could expect a further bearish movement. This instrument could reach 1906 and even the psychological level of 1900. On the other hand, a sharp break of the downtrend channel and close above 1921 on the 4-hour chart could give gold a chance for recovery, and the metal could rise to 1928 and 1930. If this scenario occurs, the zone of resistance of 1930 could put pressure on gold, and from that level we could expect the bearish cycle resume. If gold trades below 4-8 mirror level at 1937, the outlook for gold will remain negative. Below this area, gold is expected to continue its fall in the short term and can reach the zone of 1-8 mirror level at 1890. The first weekly support is located at 1917. If gold consolidates above this zone, it could be seen as opportunity to buy in the next few hours, with the target at 1921. If the bullish force prevails, we could continue buying with the targets at 1930. Our trading plan for the next few hours is to buy gold in case there is a break above 1921, with the target at 1930. Around this zone, we expect a technical correction, which could be seen as a signal to sell, with the target at 1906. And finally, here's Laurie Bailey with USD JPY currency pair forecast. Let's have a look. The USD JPY pair has reached an important target that we have repeatedly mentioned in recent weeks. The embedded line of the global price channel, 147.90. Here's how it looks on the weekly chart. A reversal divergence is forming with the Marlin oscillator, or the Marlin has converged into a technical wedge. A divergence is also brewing on the daily chart. There's a high probability of a reversal. The initial bearish target is the 145.90, and it's approaching the MACD indicator line. Consolidating below this level would indicate that the pair will move towards a decline, strengthening of the yen in the medium term. There is a divergence on the 4-hour chart. Here, the MACD line may rise to around 147.33 before it meets the price, which could be close to the peaks of August 21-22. So the first target is the 145.90 and 146.33 range. That's all for today. See you online soon. Good luck.